Hey everyone, Logan Hertz with Hazeltine LLC. We are joined again with Chris Miller. Chris Miller is an expert in high-end tax mitigation. And today we're going to talk about maybe a potential alternative to standard investments that might be worthy of consideration. Chris, thanks for joining us. How are you doing?
I'm doing good, Logan. How are you?
Doing well, doing well. Thanks for taking time to spend with our audience. I want to first give the standard disclaimer that neither Chris nor I are making any recommendations. We're not telling you what to do or not to do, but we want to just discuss a potential opportunity that both he and I are somewhat involved in that might be worthy of consideration. That is kind of an alternative to the standard, what I would call the standard approach, which tends to involve the stock market, mutual funds, retirement accounts, things like that. So if you are looking for a way to get a decent, reasonably safe return, quote unquote, even though I don't know if return on investment is the right metric, but this could be a decent alternative to it. So with that said, I'll hand it over to someone who knows a lot more about it than I do. Chris, you want to talk us through a little bit of this alternative that some people might want to take a look at?
Sure, I'd be happy to, Logan. Before I get started, I hope everybody has a happy Fourth. Obviously, that's a big time for our country here in America. But outside of doing, tax mitigation and saving my clients up to 40% in taxes, what we really like to do personally with our own money and recommend for our clients is more private placement, basically real estate backed funds that are how they're structured is very safe because they have some type of collateral backing them that is a strong collateral. Like in this example, it's land. So they're not creating any more of land like the song, figure out where people are going and buy the land first. And you can always never have enough land, especially in a country like America. Um, so in this particular strategy, this group that I work with that does this, they're out of the Atlanta, but they're really developing all over the southeast, primarily in highly sought after, high demand locations. For instance, like Greenville, South Carolina is booming. Huntsville, Alabama is booming. People are moving from Birmingham to Huntsville. Obviously, Atlanta is booming. Those are some examples. So I like that because these are cities that have a huge need and are going to require these types of deals to continue to support the amount of people moving in. And most people don't realize because the economy is sort of rough right now, there's still a massive housing shortage in America because all these people moving into our country are moving from, the West Coast to the South because, personally, we think the South's better. They have to have somewhere to live. So you can look it up, the statistics. Logan may even be able to pull it up while I'm talking, but there's a massive in the tunes of millions of housing shortage in this country. So, with all that being said, this particular group, what they do, why I like it, why I feel like it's a very safe alternative to doing, a riskier investment or even being in the market, which personally I think is pretty risky too. What they essentially are doing is they are financing a very well-known developer who they've been developing for 3 generations, been around for a really, really long time. Very, like I said, very well-known, very respected. And basically, for a guy like that to go to the bank and get a loan, not only does he have to deal with the headache of that none of us like. Like nobody likes to refinance their mortgage. They just do it to save money. He's got to put 30% down. So that's a lot of cash for someone like him in the tune of millions of dollars. Also, like every time they're doing a deal, the bank is sending people out. There's all this red tape. It's like politics. So with us, he basically has cash instantly at his disposal through the capital fund that is lent to him, that he can basically get to whenever he wants to. So it's a good deal, even though it's costing him a little more. It's really a better deal for him just because there's not a lot of headache involved with it. So that's essentially what they're doing. That's sort of the why. Um, the actual structure of it, that to me is what's really important and what makes it very safe, and almost like the CEO says, it's almost like a bond like investment because of how safe it is. It's just, really good returns. What they're doing is basically all of the national builders know this particular developer. They will go to him and say, "Hey, look at that piece of land. We want to build tract homes there or townhomes there or whatever it is." And so then he goes and vets it. He may spend 6 months to a year before he's really ready to get started and before he's ready for any of our funds. So, which is good. It's like crossing the T's and dotting the I's. Then he said, "All right, let's move forward." They put a percentage down to lock in the deal for them, the national builder. Then we basically finance it. And this is just, if you know anything about construction or developing, this is all horizontal. So horizontal is where you're just doing land development. We're not building anything which is considered vertical. So I like that because there's less risk, right? Like if something did happen, there's a lot less risk when you're just talking about the land versus an actual structure. Um, so what they're really doing is we go in there, we finance it. He gets the land prepped. If streets and sewage and all that has to be put in and lots, he's doing all that. And then he turns around and essentially flips it to the national builder that's buying that deal for a profit. And in our arrangement, what they basically do for us and our clients is they'll pay us on a 12-month deal. So they'll have your funds for 12 months and they'll contractually guarantee you. You may say, well, how can they do that? Well, number one, the fund is in first position on every land deal, meaning that if anything did happen, they're going to get that. They're in first position. They're going to take the land. That's super important. Also important to note that this particular developer has never defaulted on any kind of loan or anything. So there's really no red flags whatsoever. But it's just peace of mind. And so with the clients like myself that have invested, we're basically giving an MOI to the capital group, a memorandum of indebtedness, because they can't individually list every single investor. That would just be very cumbersome and a massive amount of paperwork and cost to them. So we all get a memorandum of indebtedness to the capital fund, and then the capital fund is in first position. So you know, the one question that I would get is, well, what's the worst that can happen? Well, the worst that could happen would be like COVID spikes again and everything stops in this country. And it's just going to delay the sale of that land. But what do we know about land? We know, like I said, they're not making more of it. In places like the South, it's in high demand. In a high inflation market, land values always increase. So, to me, even if it took a little bit longer, I know that I'm still going to get my return. I know that that land's going to sell, and they'll actually, if it did prolong and for some reason took over 12 months, which has never happened in every deal we've done, it's been, to the T or a little sooner of when it was completed. If it did, they're going to usually keep paying you that 1%, maybe one and a quarter, one and a half if it goes past that 12 month. Another thing they offer for people that just are more short term, or maybe they don't want their money tied up for 12 months, is they have a 6 mil, which personally I like that because once I build up, an excess amount of cash that I don't necessarily need for emergencies or for my family, I'm like, okay, well, I can get by with what I got, worst case scenario, for 6 months. I'm going to put in, 100,000 into this 6 month deal and make a quick. So that's just me personally. Options for investing. Obviously, cash can always be done, but another thing that's really cool about this group and how they're set up and is they allow for IRA money, qualified funds to be invested. Everyone's not familiar with this, but the best way to invest IRA money, qualified money, is through what's called a self-directed IRA. Um, and so inside of that, basically, they just act like the custodian. But as soon as they get it and get the funds and get the paperwork all set up, the money's immediately wired to the capital group, where it stays, it grows. And then if you um, need it, basically you need money at the end of the 12 months, your options are you take all your money back plus the growth, you take just your principal, and then maybe add a little bit to have enough to invest in the next deal, or you just take your growth. Most of the time what we see with our clients, because they don't usually need the money, is they just reinvest the full amount plus the growth into the next deal. If you had R&Ds, obviously required minimum distributions, if you're over 72 and a half, that's going to have to come out at that time and go into the self-directed IRA, and then they would issue a check on those amounts. But what I always tell people is you just got to pull your R&Ds from any qualified account. It doesn't have to be from that. If you have an IRA sitting with Charles Schwab or Edward Jones that maybe he's doing good, maybe he's not doing so good. I mean, most of the people I talk to don't love their IRAs. That's where I would pull that money from personally. But for me, like just personal experience, my father and I have invested in everything under the sun. I've invested in medical clinics, cryptocurrency, franchises, multifamily apartment complexes, lots of startups. I mean, you name it, I've done it. And everything that was pie in the sky type returns usually ended up being too good to be true. And I usually, either lost my money or have yet to see it. But what I love about these types of real estate backed deals is I'm consistently getting my return and I'm not having to sweat over it. I'm not worried about it. I know it's going to work. So personally, at the point I am in my career, it may be one of the only things I do going forward, because if I can average 15 to 20% a year, I'll be way above, what the average person makes in their investments in this country. So um, that's really the gist of it. It's pretty straightforward. Again, it's backed by land. That's the collateral. That's the safety. Land is always going to go up in value, especially in these types of areas where it's in high demand. Um, and that's you basically have an equity piece of ownership in that particular land deal once you invest your money. Minimums are 50,000 to invest, whether it's the 6 month or the 12 month. That's the other nice thing about it is, even Aunt Aunt Kim and Uncle John got 50,000 sitting around that they could invest, and maybe it could really help them out later in life in retirement if they're able to get that kind of return over the next 5-10 years. So we do a lot of that kind of planning where people are maybe 5 years out or 10 years out from retirement, and all their money up until this point has just been in a 401k and IRAs and traditional investments. And they see, okay, maybe there's a big correction coming, maybe we want to have some of this a little bit safer but still get a good return. I personally think this is a good alternative. And I also know the CEO very well and personally, and I know that he has a very, very low risk profile. So he is not trying to do anything that's risky. Um, Everything he does, he is making sure it's very, very safe. And I think that's super important. So, any questions?
Yeah, I got a few. First of all, I did want to, you mentioned the CEO. I know he got burned back in the 2008 crash, and I know, has adjusted his approach since then, so that he never will owe a bank anything. And that's part of the way he structured the deal, right? So it's all cash, everything's cash, right? There's no bank involved, right? He's not going to he's not going to do that again. Um, and then I was also going to ask about, in your mind, without making any recommendations, what sort of a person should consider this, and what sort of place would it play in their portfolio?
What was the first question?
Well, what sort of a person should consider this?
Okay, got you. Type of investor.
Investor. Yeah, yeah.
I
Lender.
honestly, yeah, I honestly think it's a good option for anybody that's has the means. If you've got 50,000 sitting that you don't need, or 100,000 sitting in an IRA and it's not doing a whole lot for you, I think anybody, that person and above, qualifies. I mean, I have clients that are very wealthy in the highest tax bracket, make 7+ figures a year, that put in 7 figures into these. That's what a lot of people don't realize is like, even for very successful, wealthy people making lots of money in the highest bracket, they are tickled pink to make 12 to 15% on their money safely. If obviously they have a lot more to work with, but with the amount of money they have to work with, if they can safely make that consistently every year, they're good. They don't have to chase the big risky stuff and risk a 30 to 50% loss or losing everything. In my age, I've always felt like, okay, well, I can make it back. It's okay. I can be more risky because I can just make it back, which is true. But I'm getting to the point now where I'm just tired of that, and I'm tired of the unknowns and the guessing and the wondering. And the peace of mind and the safety of this is great. So while it's good for them, it's also good for grandma that's got 100,000 in a CD that isn't even keeping up with inflation, or a lot of my clients are in annuities from 5, 10, 15 years ago that aren't keeping up with inflation either. And so if they have a liquidity rider where basically they can pull all their money out and only lose a little bit, a tiny bit of growth, we can move them in this. And in 1 year of that, a 15%, they more than make everything back. And then going forward, they're getting that really good growth. So I think it's a good option for those people as well.
Yeah, the way I view it is I've never been too much of a believer in the quote unquote stock market. I don't personally play around in that very much. If people want to, that's fine. You can do that. That's totally fine. Um, but I would view this as being maybe an alternative. So if you have money in a retirement account, I think most people would be happy making double-digit returns in a retirement account, right? And they're maybe a bit nervous about the market and things that they can't control. This could be an alternative where you could potentially get a decent return. And in my mind, to your point, there's maybe not, it's not risk-free. There is risk involved, of course, but relative to the market, right? I mean, there's a bit more safety there because it's an actual deal. There's actual collateral, right? There's actual land that's backing the deal, right? And you can have a bit more control, might be a strong word, but you have a bit more involvement, a bit more understanding of what's going on. Whereas if you buy some mutual fund, I mean, how much control do you have over that, right? And how much
Or
risk
even
is it?
like a REIT, that's probably what the general public would compare this to, that they would have at their disposal. But you don't know, you can't go put your hands on that, and you don't know. You can literally, for my clients that are in the South, they can literally go drive and see these for themselves and say, okay, yeah, I mean, that's a booming area. They're building 600,000 to 800,000 dollar houses like crazy over there. So, we like it. And like I said, in all the things I've done, I mean, I've had rentals, I've flipped, I've done it all. Even when I had rentals in this market, obviously I'm not talking about, it's different if you were in California or something, but in this market, you're usually doing good to make 10 to 15% net profit on a rental property. So I'm like, wait, so I can make that same thing without the headache of evicting, getting new tenants, dealing with all that, repairs, all that stuff. Yeah, obviously you own the house that's going to inevitably go up in value. We all know that, but it also comes with a lot of strings attached. So I guess for me, like, been there, done that, had a good experience, but I'm moving on.
Yeah, yeah. Okay. So I may or may not be able to include some links, but we'll see. I know that we have to be I want to be careful with what I'm saying because I just want to reiterate, I'm not making a recommendation. I think it's worth exploring,
Right.
but you ultimately have to make your own decision. This isn't for everybody. And I want people to make their own decisions and take responsibility for them. I don't want to take decision-making authority away from my clients, right? That
Right.
wouldn't be good.
Yeah,
So
absolutely. I mean, that it's just like with our tax planning. Our job is to inform and educate, because I believe that an educated, knowledgeable buyer or investor, or really anybody, is always better than the person that's just going to blindly trust their Edward Jones or Morgan Stanley guy, and they don't really know what's going on or what's happening, which most people don't. Most people are financially illiterate. We don't do a good job of educating people on how finances really work. And I guess it sort of falls on the parents, but if the parents never knew, then how can they train their kids? And we know they don't teach that in school. They don't teach us practical stuff in school. So, I think it's part of our job as, you know, advisors who understand this and know this and who are blessed and fortunate enough to have access to stuff like this and have this knowledge to share that. And so I'm, happy to be on things like this to share the, knowledge that I have that I've been blessed with. But yeah, I would just say if you're interested, reach out and we'll jump on a call and I can send you any information you want if I, directly to the.
Yep, I will definitely include information on Chris's company and of course my company, and you can reach out to either one of us, and you know you can talk to the CEO if you want of this particular opportunity and judge for yourself, right? But in my mind, and this is just me, I view it as a really good potential alternative. If you are playing the market, you're probably going to be happy with a 15% return, right? And what if you could get it in a safer, more liquid manner, right? Where you have a
Yeah,
little more control, right?
right. It's like the whole, when they tell you your bond versus your equities, I would say, versus having stuff in bonds, maybe inside of that account, that's the kind of money that I think is good to go in something like this because it's still pretty safe.
Right.
Because
We are lending money. That's how we're
right,
making the return. We're
it's
not
a
buying
debt.
a stock. We're lending money and there's collateral backing that
Yes,
loan. Right.
it's been going on for hundreds of years. All of your high rises built all over the world in Dubai and here. Most of them were financed through mezzanine financing, which is this type of investment or lending. So
Excellent. All right, Chris, anything you want to say in closing for our audience?
just thank you for your time. Thanks for having me, Logan. And again, hope everybody has a happy 4th celebrating America.
All right. Thank you, Chris. Bye-bye.